CNBC. Well, here, let me back up. Let me see if I can get my thoughts together after 3 days of being fried. Wall Street has their own vested interests.
Oh, no.
So say, and you know this. So saying something beat estimates. I don't have the numbers in front of me, but let me get this straight. An unemployment rate that goes from negative, or goes from, let's say, 15% to 12% or 11%. Seriously? That's still awful.
Well, you know what? But usually Ed Lazer, and I happened to be in the car, so I was listening to Santelli's interview, and Ed is really very measured. And Santelli and I were talking, I thought he was way too optimistic on the way he saw
I
those
agree.
numbers.
I didn't see the interview.
Yeah, and when I broke them down, okay, but the market, let the market run as where it is. And initially, the bonds didn't move at all, not an iota did they move. And
No.
But that's
No.
And I said to Santa, I said, first of all, anybody who's looking at the bond market, and that's I have great respect for Lacey Hunt and Rosenberg and Gary Schilling, but these bond markets are so badly broken. What do you think you're going to see from them? What do you think? I mean, yeah, there may have been people taking profits, but I don't think that they tell you what people think they're going to tell you, unless they're going to let the 30-year go by itself. But if you listen to what Mnuchin laid on the market yesterday, the Fed is going to, I guess, move some of its funding from the short end to the long end, which will force the Fed to buy 10s, 20s, and 30s. Otherwise, they're going to see a tremendous spike in, or at least the curve would steepen. And I'm not, from everything they said, they want yield curve control. I don't, it's everything that we know. And I'm glad that we're seeing some correction. The metals, they needed to correct. It was, believe me, I had an order last night to sell silver at 30.10. I figured, based on what we talked about yesterday with the knockouts, that they, after they took out the, 2,900 held and then they backed off and then they ripped through that as Asia came in last night. And then I figured, okay, now we got to go to 30 because whatever was left up there. And they got 29.91 was the high. I go, but that was the trade, was to push a little bit.
So Ira, when you look at the entire edifice of global macro, not just the U.S. stock market, because we're the only one that's got Jim Cramer that plays cheerleader. You don't have one in. You don't have a Jim Cramer in Europe. You don't have a Jim Cramer in Australia.
I don't know. I don't listen. I used to listen to the European CNBC Europe because I used to be on all the time with Luisa Borges, and I always thought that they were great, that they did really good work. So yeah, I guess that's the case. But I really have not paid attention to that in a long time either. Bloomberg I try to listen to, but then they get wonky with their politics all over the place. So yeah, gets in the way.
I mean, I guess. I hear what you're saying, and there's a part of me that does temper what European bonds are doing, what U.S. bonds are doing. But then I also say to myself, if growth truly was accelerating, okay, yeah. And I learned a long time ago from Gary Schilling that 60% of the 30-year Treasury bond yield is affected by inflation. So if growth really was going to take off, investors probably would be dumping the crap out of their bond holdings. And also, if that were the case, you'd be seeing gold get dumped as well. And then you'd see the bank stocks truly start to take off, not be down 22, 23% year to date. Alexandra, this is strictly dollar related, and like Ira just said, this is just a very overbought condition.
Yeah.
you know, and it's due for a correction. So I just sit back and I go, you know, I'm looking at European bonds, the currencies, you know, all of it, including certain U.S. sectors, and I go, you know, the sectors that really should be doing well in a growth, an organic growth setup, just aren't there, and not even close.
Well, you know what? It's
So,
funny. They had Tom Lee on, speaking to that, Angelo.
oh my God.
Hey, well, you know,
All right, all right. Lay Tom Lee on. Lay him on me.
well, you know what? You do have to give him his due because he did say when he said it was going back to 3,400 when it was at 25 or 26 on the S&P. But regardless, yeah. Listen, I'm not but he was talking about that the rotation that you're absolutely talking about, and it was so bullish. I was there going, I must be missing something. I don't see it. And I listen, and it's not why I've been, you know, anybody who pays attention to me, it's not really why the gold has performed for reasons that I've been very consistent about. So I don't care about that. Yes, they're trying to justify why the stocks are here. I just point to the Fed. And if you think that the Fed's next move is yield curve control, because as we talked about yesterday, and Andrew was, you know, very kind making me the chair of the Fed. And what would I do? They don't have an exit strategy, so we know that there's no way to change narrative, right? There's no way to change it.
No, not even. No, hell will freeze over first.
And then listen, I think the market initially had some bullish sentiment baked in because when New York's, you know, I was amazed. And Judd, I'm sure you got to pay attention to this. New York schools are opening,
Yeah, that's unbelievable.
right?
I mean, they've already, you know, they're not going to open here.
You know, they've committed. So that makes it the Chicago school decision really ridiculous because they made it too early. Yeah, I know you got to get ready, but they committed to not opening, and again, with the teachers holding a lot of the economy, and if you read their demands, it has nothing to do with teaching. They're talking about, you know, income differentials. You know, no, you got to get the schools open for parents because even if the economy comes back and the schools aren't open and parents can't go back to work, it's a tremendous drag on the economy going forward.
Yep.
Yeah,
And I mean, I think Ira too. The PUA money, the pandemic unemployment assistance. You know, the 600 a week, right? That has clearly gone a long way to keeping a lot of people's heads above water. You know, there's no question about that. And Visa, you know, when you look at Visa and MasterCard, you know, Visa has better exposure to e-commerce, and they do a lot more in the way of debit, and a lot more transactions are more and more are being done via debit card, which is to Visa's advantage. But you know, you look at Visa and MasterCard today, and they're not behaving well. But then again, they're in the XLK basket, which always was odd to me, but it is what it is.
well,
So I think that's part of it.
Angelo, they're also suffering because there's all this presumption that even with that $600 credit card, the stress in the credit card markets from non-payments is growing dramatically.
Oh, heck yeah.
Yeah, so we're at that point in time, and you know, and that's why Elizabeth Warren would get she'd get a lot of play if she put forward a bill to cap credit card interest rates at 3% again, so that'll cover the expense of processing the cards for the banks, but you would alleviate, you know, people are, you know, at 17.5 and 18% where they're carrying forward all the, that's a shitload of money. And then I listened to somebody tell me, well, you know, somebody was on that, well, that number about how many people own stock is not right because the pension, firemen, policemen, everybody in their pensions. Well, take a look at their pension performance, and there's no way that you can say that the average working person in America, even through their pensions, owns that much stock, because it all can, who's your pension manager and how it's being handled. But the pensions have performed so badly that I don't know how you can even make that, that people are stockholders. I don't listen anymore, and I was really blown away. I go, God, I went through those unemployment numbers, and I didn't see, I don't look as everything is negative, but when I saw the seasonal adjustments and everything else, I go, okay, it's an okay number. But you tell me, if they don't get this package, and if Pelosi's already moving down $1 trillion, because to me the most important part will be what they do with state, county, and municipal governments, because they're all hurting. They have their revenue stream, and that's an important economic indicator, by the way, because if they're not collecting taxes, like Chicago is really suffering, because look at one of their big tax bases is O'Hare. Are you going to tell me that the revenue stream at O'Hare isn't being, and how about listen, I've been home 6 weeks. I have not been downtown except driving through it last week or a week and a half ago when I went to New York. I have not been downtown. You know how much tax revenue that is? And I'm just one individual, from parking my car to eating maybe breakfast and lunch. Yeah, there's a lot of things, everybody tells me it's a ghost town, even with the floor opening on Monday.
But to go back to what you said earlier about expectations, as Wall Street always seems to do, they take things and extrapolate them out in a linear fashion, right? So, the shutdown, in my mind, is like, okay, phase 1. So the shutdown was the equivalent of a depression, right? Phase 2, let's call that the reopening, right? So Wall Street takes the reopening and the improvement as a result of the reopening and extrapolates that out as a V recovery. Now, like you said, I think we are slowly moving into phase 3, which is a recession, right? And it's going to be the grind. And the way I see it, it's happening in slow motion, and it's going to end up being a slow motion train wreck as we continue to get, like Uber Eats, right? Doubled their revenue.
Angela,
they doubled.
One second. So that might have been a decent low on the SPOOs down there, only because you got an ORH day in the SPOO NASDAQ. And Andrews had us, you had one here. You got another one going on, and it's right up in the balance up in here. And it's how this plays out at the end of the day in the Monday. Okay, go ahead.
All right. So, Uber's earnings, I looked at them today. So their revenues doubled, but they still lost $250 million freaking dollars. Okay? It's a story. It's a pandemic loser, right? And these stocks, I don't see how private equity is going to continue to fund a company like this that doubled its revenues but still lost $250 million on the quarter. So these are all the kinds of things that are going to have to get worked out. Now, this morning when I turned on the television, I don't know anything about this, but I saw a commercial about call your congressman to support the Restaurant Act. And I don't know anything about it. Have you guys heard anything about that?
No, but I have a daughter who's a chef. Maybe I should ask her.
Yeah, and you got to realize all these people don't have health insurance.
Yeah, I mean, this drag is, I'm listening to it. You know what? The market right now is telling me my analysis is wrong. So I step back and I look at it, and because as you look at, what's taking place in the metals with the the 10 years down. They're not down significantly because nobody can sell them with any conviction. Because again, so what was the unemployment rate this morning? 10.2.
Yeah, to 10.2, 10.9, something like that.
Hold on. Well, let's not guess. Let's not guess.
Headline unemployment 10.2.
10.2. Okay, so we're still at 10.2.
All right, and then there's something called Ira. There's something called the adjusted unemployment rate X classification errors, 11.1.
Yeah, right. So it takes out some, and then there's the seasonality. So they added like 300,000 education jobs, which I found preposterous. Okay, but that's a seasonal type of adjustment. There was also the state and local government also added jobs, a seasonal. So, you know, again, the market's telling me my analysis is wrong, so I'm stepping back here and being very careful. But I am scratching my my head here.
Well, Ira, can you back up a sec? When you say the market is telling you your analysis is wrong, which market or markets are you referring to?
Well, you know, I'm looking at the dollar. I'm looking at the metals. You know, and I'm geared up for a total correction. I know. You know, listen, I'm never one who believes that markets, you know, that trees grow to the sky. I don't believe that. So I'm always looking for some correction. It's a matter of how well I trade it and whether I'm going to make money in it or not. And usually I don't fade what I've been looking at. I've done here a little bit with the metals. I've taken a little bit opposite stance, but I am in this, you know, in a cyclical sense. You know, my plays. The only thing I'm really doing in my stock portfolio is I've been buying on all the breaks, Freeport, Bunge, ADM. I'm building in the Fed being successful creating inflation with unloved stocks of substance. You got to have food. The food stocks, and they've just been unloved. Those charts are terrible. But I'm looking at those who are contracting their debt and making some really good decisions, which is why I liked, I still like, but I need for it to convince me now on BHC, Bosch Healthcare, because they're spinning off Bosch and Lam, and they're taking that, whatever money they raise and paying down some debt. That's a positive to me. Now the market's telling me, you know, you're way ahead of yourself. That's great. And my point being with Bosch, with BHC, is if you look at that chart on a weekly, and I said it yesterday, that 200-week moving average coming out of that formation will be a powerful thing. It was above there yesterday. I had a $1.20 stop in this morning. I got stopped out. End of story. But I will be watching that going forward. I like plays like that. So if there's going to be a rotation, quote unquote, I will play in it because there are certain things that I do see here. I like the ag sector. I like the commodity sector because I think the downtrend in the dollar is far from over. Although I see Morgan Stanley put out a piece that 8 people sent me calling the move way too fast, and I've traded a lot of dollar moves in my life. This one has been kind of a grind with a lot of corrections along the way, and today's another correction, which I'm happy about. I'm happy to see this correction.
Ira, the only thing I'm a little bit surprised because I know you like to buy stuff that at least pays a dividend, and it looks like Bosch Health does not.
It does not. It's totally a company that looks like they're going to pay down some more debt. It's been under pressure, and that weekly chart really caught my attention yesterday when it popped. So I bought a $2.50 break because it was up to $22.90, I think, on the high, and I bought it at $20.40, $20.45. So I said, you know what, and it was still holding that. So that was a really nice technical picture setting up. Didn't bear out.
Well, it's just come down to the gap, Ira. It just missed filling at 1805.
Hey, I hate losing money. I take my losses, but
it's just,
You know, it doesn't mean I'm comfortable. I am comfortable taking losses, but when I saw that formation, that's like, you know what, Chuck? That reminded me of when silver went sideways at $4.50
yeah.
for a few years. I'm going back, quite a bit back, but that's the kind of formation it was. It was like so tightly wound. And you want to talk about a stock that's unloved. That's an unloved stock, especially after Ackman and Loeb and a few others got their brains beaten in on that one.
Well, they're telling the options guys are telling me right now there's been massive call buying in 2021s and 2022s.
Yeah, isn't it? It's right. You know, and it's got to be out of that formation. Last night I got Bookvar sent me. He sat down with Josh Brown. Josh Brown interviewed him yesterday.
Yeah.
If you want, I'll send it. It was actually pretty good, 25 minutes. Josh Brown, I used to like a lot. He got a little too full of himself for me, but he's a smart guy. And he treats Peter with a lot of respect. So it's worth a look. He's usually all knowing when he's on that with the judge or this one. Peter gets a lot of latitude, and he actually asks some questions. So it's like when Cordelli and I sit down, or anybody who sits with who's traded, they do good interviews if they really know their stuff, because they know they know the questions to ask you, and you're only as good. You can only come across on an interview or in any kind of podcast with anybody who's really good, who knows how to ask questions. If they'll never get it out of you. So, in fact, it was so good. I sent an email to somebody I haven't talked to in a while, but who I have great respect for, Gary Kaminsky, because he's really fallen off the radar.
Florida? Didn't he go to Florida and set up an office or something? Or what?
Yeah, now he's all over the place. He actually got back to me right away, so we had some online chats. I was worried about his health. Usually I hear from him every once in a while, but when he had that half an hour on CNBC, I used to love that because, he had money, he had enough wealth that he would sit there and ask questions that I would feel I would ask, and he he didn't back down, because he didn't care. He didn't care whether you were going to come back on his show or not. He was going to ask you what he thought that people who traded for a living and invested really wanted to know. I loved his half hour.
Ira, you mentioned Freeport. Do you have any opinion on Southern Copper?
Also bullish. I'm just, I've been leaning to Freeport because Freeport has more gold, so with the gold, and really I started pushing this play back in April. So, and I put my kids in it, I'm not enormous. It is one of the biggest concentrated positions, though, dollar for dollar that I've had. But, I buy on breaks. Today, am I buying? No. Even though I can define this, I want to see it go down and test that 1310 area. And if it did it on Monday, I would add to the position. But
yeah,
I'd like to see, Judd, I'd like to see, where copper goes from right here.
Well, that's,
right here is what I want to see.
yeah, the 281 areas. Well, now we're under there. So, there's massive profit taking. And when you think that Freeport, after its recent run, is only down 74 cents, that's okay. That's okay. It's a good correction.
You got to look at the copper if it comes back to 275.
Yeah, it's listen, and that was the first one to really move when we think about it. Even before the gold moved and the silver was the last piece, but copper had a really nice run. When I did that piece with Louis Gavet back in late May, and him and I really agreed on that, but copper was at 242 and ran up, 299. And for, an industrial metal, that's a very heady move. That's a very heady move. So it's entitled to correct. Let's see what happens. But if they if there's, you see, and I think the infrastructure basis is going to be a global phenomenon, by the way. China, not going to be the mainstay. I think Europe, with its green tinge and the way they're going to keep pressure on the funding that they're doing, is going to be massively green, which will be good for copper. But let it correct. I have no problem whatsoever.
That's my feeling.
Yeah, you know,
I love these moves. These moves are great.
this is a trader's market. Absolutely. I can't agree more. This is,
I'm just the only thing I'm watching is I'm just looking to see. I mean, I shorted a little bit of the dollar, a little bit higher today.
yeah,
I just want to see where it goes from here.
I agree. I'm dabbling. You know, I would really like to see it close in the cash, the spot euro over 117.85.
Well, it was a really good low on the point and figure, Ira.
Yeah, I know you said, I saw that, Judd. And that was, you know, I got a little tentative because I know how long people are.
Yeah.
And when I say people, I don't mean the Robin Hood. I don't mean Robin Hood traders. I'm talking about the what I call the titans of global macro. Those guys are long.
Yeah. It's not changing on the way. Think about it.
Yeah, yeah. Which for considering the move it's had.
Yeah. It's moved 10 figures. So,
Yep. It has been a very sizable move. But I would still like it to see it in the cash close above 117.85 would. And you know what? And again, let's think about this. If these numbers were as good as people are talking about, copper should be the stalwart today, right? Especially coming off a correction.
yeah. Well, yeah.
And platinum should be performing better, and it's not. It's actually weaker than the overall true precious metals. Copper
That was the
and
first one to fall out of bed. They sold the copper against everything.
yeah,
I think one of the things to take into account, though, is because the dollar has had what is this now? Last week was what, week number 6 of 6 straight down weeks. I think that you know, that sucked in a lot of Johnny-come-latelys, and now, you know, here they are. The trade's reversing on them.
absolutely. And the markets, remember, the job of the market is to cause as much pain and aggravation as possible.
Oh yeah.
You know, that's what markets are supposed to do, historically.
So how high did the euro? 119, huh? That was yesterday.
It went to the opening range of the euro twice. At least that's what Andrew had, was 119.19 for the opening range of the euro. I thought it was a few ticks higher, but I wasn't on the floor when it opened.
Judd, it was funny when you put up the gold support level.
Yeah.
I had just put in my bid exactly down there. That was going back to the high that was made on that certain bar, 23.90 on when was it, on Wednesday. So I really like that area. Low risk area. Again, I'm all about defining my risk when I make a trade. And you know what? I've waited. I've gotten a $60 break today off the highs of last night for the most part. Yeah, $60.
Yeah, you know, that Langer came up with that number. I had to do a double take when I saw it, because, you know, sometimes I always look at David's work, because, you know,
he's very bright. He does some great work. Really, this room was lucky to hear from him. When you put that out there, it's really good stuff.
So once I went back and reviewed it and saw it, and you had nice.
But Angelo, you make good points, but I like the market corrects. God bless them. And maybe there's a deal coming.
Oh, there's going to be a deal. I'm under no illusion that there won't be.
Like it's a political.
You know.
They
Yes.
neither sides have the intestinal fortitude not to do a deal. They don't have it.
Well, they get bombed at the elections. They don't.
Oh, none of them could take that heat. None of them.
You know, it's just a matter of what the size of the deal is going to be, in my mind.
Right, and what it's going to be specifically targeted for. Who are they targeting? Main Street? A Main Street deal would be good in my mind because Main Street still, and the point was, and I know that Mnuchin's made it, and Kudlow was, only 22% of the original deal has been put forward into the system. Supposedly, that's their numbers. I'm not smart enough to do the accounting on that. But.
I thought there was 150 billion left over.
Oh, there's all kinds of money out there. It's all kinds of money. The question is, how much is the Fed going to be buying to monetize everything the Treasury is selling? And that's why Mnuchin's comments yesterday were really pretty interesting about moving down. I'm all for that. I think they act very irresponsibly in the way that they borrow everything in the front end rather than moving out down the curve. It's one of the places where I agree with Rogoff and Larry Summers and, some others. Take advantage, and as long as people, you got people out there touting, the bond market, there's no inflation. I'm gagging on that comment all the time. You are still generating a negative real yield. As long as you generated, even on the 30, tell me what what's the inflation rate? 1.5%, 1.3%?
Well, I guess it all depends on which item you're looking at. If somebody wants to focus on healthcare, that's one thing. If you're looking to buy a cell phone or software, garden equipment, that might be something else. It's the average of things.
Yeah, I'm not talking about one-off purchases, though. I'm talking about rent, food, healthcare. Let's go on and on and on. Those are the things, and the rents we know, and that's another issue. See, Trump, I think, is actually being really smart here by trying to target for Main Street continued rent relief. Well, again, rent relief then becomes problematic for landlords. And you can't tell me that the commercial real estate market is healthy. You can't tell me that.
No.
You can't tell me that the airline industry is healthy, that the airline manufacturer, the plane manufacturer, you can't tell me that. How about the cruise? No, a hotel and restaurants, they have an initial thrust, but I think the recent moves in the pandemic, in a lot of those areas has curtailed that. The things I've found interesting in the unemployment is that one of the biggest job growers was Florida. Now, I'm just missing something here.
Well, that's everybody bailing out of New York, going down there and starting their offices.
I understand with the construction, but everything else you hear, who's going to Florida for a vacation?
Well, nobody I know. I don't even know if the South Americans are allowed in. Eklund, do you win?
I don't think anybody's going anywhere right now.
No, and I'll tell you, I just went to New York.
My wife.
I went to New York. I drove.
Yeah. I mean, I went to South Carolina. I drove.
Yeah. So I drove. Therefore, I didn't. I drove straight through. No motel. Yeah, I stayed in a hotel in New York. no plane, no Ubers. Let's think about, and but there's a lot of people doing what I'm doing. I mean, you see a lot of mobile homes, and I know a lot of people are traveling. They're basically staycations because they're not staying in motels or hotels. The RV rentals are screaming. I don't know if you know that. Way up.
Oh yeah, oh yeah. And KOA, Campgrounds of America, are probably packed.
Packed, packed, packed. Yeah, absolutely.
Winnebago was up huge this year. When this started, Winnebago Industries was like one of the biggest winners.
Oh, Ira, to go back to something you had said a long time ago about Uncle Mario Draghi.
Yeah.
Remember how you used to say, he's basically locking in the Germans?
Yeah.
Right? Okay. So the way I look at because you mentioned the Fed, the way I look at the Fed, as far as I'm concerned, our Federal Reserve is locked in to buying all the paper that the Treasury issues until proven otherwise, until they demonstrate that they're not locked in.
That's what we're seeing is classic monetizing of the debt. There's no other way around it.
No, they're just burning the U.S. dollar.
Yeah, and the dollar is reflected, and you know what, people. So, and again, when does it stop? That's what Andrew Perry and I were talking yesterday. There is no exit strategy. It'll just go. It'll just go on, or as Ben Stein's father would say, how long it can continue until it can't go on anymore. Well, I don't even know what that means.
Well, you know what? Maybe what that means, not necessarily until it can't go on anymore, but until the rest of the world is flush with dollars and they don't need them anymore, or they're not short of them anymore.
100.
That's something else that I've got, sloshing around in the back of my mind. Maybe, this game can go on until the rest of the world is up to their eyeballs, and then nobody is short of dollars anymore.
Yep.
Including the Chinese.
And that's what's been going on here. Chris Whalen put out a really good piece. I think Judd had. I think I sent it to Judd. Let's see. I gotta see if I still have it. I got so much crap.
I didn't get it, Ira.
Well, hold on a second. Really good piece, but hold on. Let me find it, because my dear daughter wants to get it this morning too. So I gotta get her. I gotta get her up her running. I need to bounce stuff off of her.
Ira, are you back home?
I am home. Yeah. Yeah.
Oh, okay.
I went for 5 days, 1 day driving each way. Really. Here, I'm going to send you the Bookvar piece with Josh Brown, Judd. I'm going to send it to you right now. You can do it.
I can forward it to Angela.
Yeah, here it comes. I just sent that to you.
You want me to drop it in the chat?
You can. Yeah. Sure. Hold on. Come on. Where am I? Gotta find this. Shit.
Right there it is.
I gotta find the Whalen piece because it's really. Bless you.
Thank you.
What did I do with that piece? You did get that, right?
Yeah, I'm putting it in right now.
Good piece. Oh, come on.
There it is. Oh. I'm gonna have to recopy that. Hold on.
Come on.
Hey guys, it's Josh Brown. I am here with a face that's probably familiar to you if you watch financial television. His name is Peter Bookvar.
There you go. Here, it's
Hey
a
guys,
better
it's
link
Josh
there.
Brown.
Yeah, I Cherry Nahabedian finally opened up.
What did?
Cherry Nahabedian at Grundy opened up,
Yeah.
and she's doing takeout for me tonight. Her foie gras burgers, soft shell crabs, truffle fries.
Okay, now I'm sending you the Chris Whalen piece too. It's gonna come via some, hold on, let me see. Let me get it. Yeah, here it's gonna come. So clean it up because I don't want you to put it out from the one who sent it back to me after I gave it to him to read, Judd. Don't send it out like that. Okay, here that comes now too. You know. Let me know if you have all that.
I got it. I'm gonna cut it, and then I'm gonna
Yeah,
email.
please. Yeah, take Sparty's name off of it.
I'm just cutting the everything out of there, and I'm sending it to myself, and I'll put in the link.
Even though that comes to me directly, but I sent that to him because I like to, he's such a good interest rate trader. I wanted him to read it. I'm going to mute you for a minute. I'll be back. But those are two.
Oh, come on. There you go.